Today is Thursday, August 8th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Kevin Mirko will share their expert opinions on today's show. But first, let's see where the markets stand. The cryptocurrency index, CCI 30, has stayed close to the 4,000-point mark. It stands 3% in the green so far in August, and the index is up by more than 80% year to date. The 30-day Bitcoin volatility index slipped slightly below the 5% mark yesterday. It has been trending close to this level for nearly a week now. The CoinMarketCap website's daily traded volume indicator has stayed above the $60 billion level during the past 24 hours. The Messari website's real-time volume stands at just under $3 billion. The Bitcoin dominance indicator has continued trending higher, and it measures at nearly 69%. The top 5 digital assets show a generally mixed performance picture. Bitcoin is the top performer with an increase of nearly 3% as it looks to break through the $12,000 resistance level. Ether is virtually unchanged over the past 24 hours at just slightly more than $225. XRP has slipped slightly south of the 31-cent mark. Bitcoin Cash trades 1% in the green after facing resistance at the $340 level. And finally, Litecoin has slipped to trade at $90. The Coin 360 heat map showcases why the Bitcoin dominance is on the rise. Bitcoin stands in the green, while the rest of the digital assets are mostly in the red here. According to the token spread website, the XMO and Bitfinex exchanges have the biggest price difference for Bitcoin dollar, and it is 1%. The XMO marketplace posts the biggest spread, and it is slightly more than 1/5%. Today, we'll take a quick look at some of the characteristics of Elrod. The project is looking to bring broadband performance to blockchain. This is achieved by introducing an adaptive state sharding mechanism, which enables linear scalability as more nodes join the network. The project uses a technology that they call secure proof of stake. This helps to achieve lower energy and computational use. The platform can be accessed through utility tokens called Elrons or ERDs. The tokens were sold on the Binance launchpad for less than 1/10 of a cent. Currently, they trade at slightly more than 0.3 of a cent, or roughly 5 times up from where they stood and where they were priced during the initial exchange offering earlier this month. We will now review the performance of various cryptocurrency asset classes as grouped by the Messari website. The infrastructure group posts a drop of nearly 3%. There's plenty of both red and green on this chart. The media entertainment category has dropped by almost 4%. All of the major assets are trading lower here. The financial sector has declined the least today, and it is down by less than 1%. The bullish boost comes from the Binance coin, which is up by double digits. The currency category stands just 1% in the red. Bitcoin is the top bullish driver with a gain of 3%. And lastly, the services section shows a decline of nearly 2%. This is, of course, where the 5 major cryptocurrency categories stand so far this Thursday. We will now take a look at the most significant moves among the top 100 cryptocurrencies. Then we will be back with our crypto experts after this short break, so do not go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
And we are back with our experts, Kevin Mirko, CEO of the Coin Metro Exchange, and Jason Fernandez, COO and co-founder of AE Token. Guys, great to have you on the line. How are you both doing today?
Hi, Leah.
Hello.
Now, let's start with the latest on the markets. Kevin, we will start with you. Bitcoin has been facing resistance at the 12K price level, while its dominance, of course, does actually continue to increase. So what is your take on these most recent market moves?
Well, I think my take is similar to what my take is almost every week as we kind of try to pounce through these different price levels as we start to slowly but surely go higher. In that the market is maturing, and as the market matures, that means that you're starting to see, I would say, less of a dominance in terms of pure retail money in this market. We also, in comparison, let's say to last year when we kind of breezed through all these price levels, we also have a rather active futures market, which means that every time we hit one of these major resistance points, whether it's just because it's a large number or perhaps there's some fundamentals. Obviously, we've had news in the past week or so about this company possibly having futures live, and then they didn't have futures live. We're still waiting on Bakkt now for what feels like 15 years in waiting for their products to go live. So there's always a fundamental swings. And when it comes to technicals, like I said, we get to these round numbers. And now institutional guys and even retail guys that have access to obviously to a futures market or to a broker that offers these futures contracts has the ability to sell without actually owning the asset. So that's definitely causing more and more resistance in terms of hitting these larger numbers. So I would say I don't really see anything out of the ordinary. I still think that we're on an upward trajectory, at least in this kind of microcosm right now. We're in an upward trajectory. We're still in on my mind, we're still in a bear market until we pass the all-time high. So I would say we're still within a bear market, but we definitely are in a bullish trend within that bear market. And I think we're going to continue to see that bullish trend push higher. Until once we get up towards the last, let's say, high watermark that we set in the last 2 months or so here, which was 13 and some change. Once we push through that, I think 15,000 is in the cards, and that's probably going to be the next place where we see lots and lots of distribution, so lots and lots of selling around that side, both on the futures market and in the physical market as well.
Okay, but very interesting actually that you say, well, no, you don't think we're actually in a, it's not a bullish market just yet. Definitely bullish trends, but still a bear market till it gets back to that all-time high. So very interesting points there. Jason, we will come to you. Welcome to the program. What are your thoughts on the recent moves?
So similar to what I said yesterday, basically it's not much has changed. Bitcoin is still just under 12,000. I think that there's a lot of in the short term, there's a lot of sort of macro issues from a political standpoint, both in North America and also, let's say, in Europe, like Britain and Brexit. And things like that, and also the problems in Hong Kong. There's an extremely tumultuous world, and Bitcoin is sort of is basically proven to be a non-collateralized asset. So when people are trying to save to protect themselves from the tumult in the regular financial markets, a non-collateralized asset is pretty much the best way you can go. So I think overall, even in the short term, I mean, overall, I'm clearly bullish on Bitcoin in the long term. But in the short term, I think it will reach at least its recent high of 14K. I think that will happen fairly soon. And I think it will it surpass this all-time high probably in a few months. I do think that it should cross 12,000 within the next 24 to 48 hours. And then I would expect you to see a small pullback, and we'll probably settle in around somewhere between 12,100 and 12,200. That's sort of what I'm thinking. And I think over the next few days, we'll start seeing a steady rise as more money starts moving into Bitcoin.
I think, you talk about geopolitics there. I think that's something which we're often actually hearing on this program. People saying, the lack of stability globally when it comes to politics. I guess people are just looking to Bitcoin as that safe haven, as you say. Now, some experts like Avichal Garg from Electric Capital are pointing out that the market share of Bitcoin is actually even more significant when accounting for altcoins that have no liquidity at all. So, Kevin, we will come back to you. Do you also consider that the real market dominance is actually higher than 68% that, of course, we're seeing at the moment?
Well, it depends on what he meant by that statement, because if you're talking about simply market cap, then he's wrong, because obviously market cap has nothing to do with liquidity, meaning dominance in market cap is legitimately stated, regardless of where you read that data, whether it's CoinMarketCap or wherever. That's legitimate. If he's talking about simply dominance in terms of tradability, then he could be right. But to be honest, we don't have enough mature data to even know if he is right. My assumption would be is that he's probably right, but that the dominance of Bitcoin is probably, in terms of tradability, is probably not correctly stated either, because when you're talking about all the data that flows in that could be incorrect, most of the trade data pits back to Bitcoin and Tether. So that's usually the two most traded pairs on almost every major exchange. And considering that data too may be flawed, then in reality, Bitcoin definitely has dominance. Whether it has more dominance than what's being reported, I don't think anybody really has any insight to understand if that's true or not. I think the ratio of dominance could definitely be different, that's for sure. So considering that he's right, most altcoins or tokens don't necessarily have much liquidity, and most of that liquidity is probably tied up in what is considered wash trading, right? It's one participant trading between him or herself. Or if it's a robot. I don't know what the pronoun for a robot is, and if I try to make one up on the show, I'll probably get fired, even though it's my company. So I'm not going to try to make up a pronoun. But if it's just a bot trading back and forth, so in reality, it's impossible to understand really what the true metrics are. I think he's right that the ratio is probably higher, but actual numbers, no idea, because the data we receive really isn't 100% accurate to begin with anyway.
Okay, so clearly just don't have enough data at this point to kind of make a full decision, but you think he could be along the right lines. Jason, of course, will come back to you. Your thoughts equally, just don't have enough data at this point?
So yeah, I mean, if you just look at the CoinMarketCap numbers, obviously there's the Bitcoin dominance is exactly where it is. If he's talking about how much of that is wash trading and how much of that is sort of manipulated numbers, I think overall you could make an argument that that a lot of the altcoins in aggregate are manipulated much higher than Bitcoin, because Bitcoin is so spread out over so many different exchanges. So one could make an argument that quite a bit more of the trades in the altcoin among the altcoins anyways are sort of wash trading or some sort of fraud trading. And in that sense, yeah, you could say that Bitcoin's dominance is higher. Sort of one of the ways to look at it is there's a new metric that people are looking at. It's called the realized market cap, which is currently at something like 93 billion, and it's sort of continued to hit fresh highs. It's what it refers to as sort of the price at which Bitcoin was last traded, along with how many coins moved in at that trade. So by multiplying those two values, you can sort of generate a number that accurately judges Bitcoin's overall health. And when you try to compare that to altcoins, that doesn't quite work the same way. So you couldn't really say Bitcoin's health in comparison to altcoins using something like this, but it would still be a good metric to start looking at.
And, I just want to continue with altcoins at the moment, because at the same time, the total market share of the altcoin king Ether has actually dropped to less than 8%. And this is sharply down from the more than 30% that the altcoin held in 2017. So, Kevin, of course, we'll come back to you. Ethereum recently hit a milestone, as there are now more than 200,000 ERC20 smart contracts on the network. So we have also seen big companies building on this blockchain. So why is this digital asset underperforming, and what is next for Ether?
Well, I think tradability and usability, and those two are not mutually exclusive. So the fact that it is being used more does not necessarily mean that the price is going to rise. Because the use of Ethereum is obviously tied to smart contracts, right? More and more smart contracts are being deployed on Ethereum. They've reached a milestone in the number of smart contracts being deployed, but there's no tie-in to value of, let's say, Ether to the actual usability of its blockchain or what it's being used for. So I think that looking at it this way, it's simply that, look, Ether fell into a bubble mainly because of ICOs. It's where ICOs started. People were buying lots and lots of Ether to get involved in ICOs. That's why it got to the price point it got to back in 2017. Since then, it's been trying to find a legitimate value. So the market's been trying to find a legitimate value for this asset. And considering the fact, when you look at things like Bitcoin, where there's this kind of, this debate, whether it's a store of value or whether it's a currency. But it has those sides are equally as passionate. And obviously, the use of Bitcoin is much, much larger than Ethereum in terms of what it's used for payments and things like that. That makes the price point grow larger. People are buying it to use it or buying it to store it. When it comes to Ethereum, where is the use case to buy Ethereum other than speculative trading? There really isn't. The use case for Ethereum lies in the usability of its blockchain, not necessarily in the use of Ethereum for any specific means, whether it be payment or store of wealth. So I do think I don't really see any reason for Ethereum to be valued at any specific price point. It just has to be valued at a price point that's high enough to where the fees and the mined Ethereum are valuable enough to where the mining continues, et cetera, et cetera, et cetera, et cetera. Or when they move the proof of stake, obviously that may change a bit. But as long as there's enough reason for someone to be there to propel the network forward, then smart contracts can continue to operate. And the system works, and that's what the system's really made to do. So again, no real correlation between the value of Ether and the actual usability of its technology.
And I think that's a really important and actually quite interesting point just to highlight there, that actually, tradability and usability, there's no correlation there, completely different. So Jason, of course, we'll come back to you. What are your thoughts on this?
Yeah, I actually fully agree. I mean, in 2017 is a really different time. And a lot of investors were really not quite sophisticated, and they probably couldn't really tell the difference between what exactly constituted value. A lot of people were sort of evaluating ICOs the way you'd evaluate a regular company when they weren't actually buying stake in it. They would just sort of look at the team and whether these guys could pull off what they were doing, but not actually look at whether the token itself would rise in price, or whether there was any actual mechanism that would cause that token to rise in price. So I don't think that the investors are as sophisticated back then to actually make that connection. The other thing, as Kevin also pointed out, is ICOs were huge back then, and pretty much everybody was receiving their funds in Ethereum, and then some of them were holding it, some of them were converting it. And sort of that was like a credit card that Ethereum that were never going to cash out, because you just constantly had these ICOs, which was creating this demand for Ethereum. And then you also had a lot of hype, about smart contracts, and you had people like Toyota, Deloitte, Royal Bank of Canada join any number of other household names to sort of build technology on Ethereum and be sort of part of the blockchain. And also remember, this is a different time for Bitcoin. So in 2017, there was a lot of problems about scaling with Bitcoin. People thought that Bitcoin maybe wouldn't ever really figure out how to scale properly. And it had some major issues. I mean, but the so-called, and so there was rumors that at one point or time or the other, Ethereum would eventually overtake Bitcoin and become the cryptocurrency of choice. But that never really happened. And part of the reason that never happened is because the problems with Bitcoin, things like the Lightning Network came out, the internal political problems of Bitcoin sort of resolved themselves into Bitcoin Cash and Bitcoin SV. And so it did not have the sort of effect that people expected to have on Ethereum. And then finally, you saw major shortcomings with the network itself. When the first major, truly popular decentralized application, which is CryptoKitties, caused such a spike in the network that essentially the whole network ground to a halt. So the first major time it was tested, it was found wanting. So since then, pretty much after a few blips, with the exception of a few blips, it's sort of been a gradual downhill slide until where its current point. I mean, there have been times when it sort of stopped and traded sideways for a while, but then it's pretty much been a gradual decline all the way up to where we are right now. And the beneficiary of this drop has been sort of other altcoins, and probably more specifically Bitcoin, which is basically obviously raised to its highest point of market dominance that it's ever seen. So I think sort of Ethereum's loss has been Bitcoin's gain.
Jason, thank you very much for that broad analysis. They're absolutely brilliant. I just want to move on slightly now. CoinShares have released their report on the crypto markets for the first half of this year. They point out that 3 things are missing from the previous 2017 bull run. These are that Bitcoin searches on Google, spike in tweets about Bitcoin, and a rally in altcoins. And according to them, this suggests that the rally was largely actually driven by institutional investors. Jason, I want to stick with you for the minute. So do you agree with this, that actually, it is fueled by institutional investors rather than retail money here?
Yeah, I sort of agree. I mean, I think what happened is normally you would expect a lot of extra searches on Google for the term Bitcoin, when there's an increased pickup in crypto. Usually it's such a hype-driven cycle that when you see a pickup in search terms for Bitcoin, you're going to then see a correlation in in volume pickups, normally speaking. But we did see actually some increase in Google searches for Bitcoin, but not nearly at the levels that we saw in 2017. Certainly spikes in tweets also shows an increased interest, and altcoin rallies was something else that happened in 2017 that didn't happen right now, which sort of indicates that this isn't quite a retail boost that Bitcoin has gotten, and it's more a situation of institutional finally getting here. I mean, there was talk for many months about institutional investors and whether institutional investors are going to get here. And I think that answer is now. I think a lot of people have clearly seen that institutional investors are interested. Things like futures products are being supposedly launched. Who knows whether they're actually in operation? But there's a lot of increased interest in vehicles that institutional investors would particularly choose to look at. Also, things like custody. That's another problem that's been solved that institutional investors were obviously worried about. So I think that this particular, again, whether it's a bull run or a bull breakout within an overall, bearish market, is sort of connected more to institutional investors than retail investors, because it's not hype driven. It doesn't seem to be anyway.
Okay, so not hype driven there, and whether it is a bull run or just bullish trends, and whatever this rally is, it's due to institutional investors in your opinion. So Kevin, we will come back to you. Do you tend to agree here?
Not really. I'm a bit of a skeptic when it comes to institutional money in crypto. I talk to lots of people at different levels in different talks that I have, whether it be with regulators, whether it be with institutional players, with banks, with all types of different people every day. And the lack of infrastructure for institutional investors is still there. There's a major lack of infrastructure, and that's one of the major reasons why the so-called STO market hasn't started to move, because there's no infrastructure. So when I talk about infrastructure, I'm not talking about platforms. Anybody can build a platform. It's about infrastructure. It's about the underlying infrastructure of capital markets. And even when it comes to crypto, Bitcoin, Ethereum, Litecoin, et cetera, especially Bitcoin, we're lacking major infrastructure. So what I would say to that is that whether a search or a tweet doesn't mean someone's buying or selling an asset, right? So the first phase of this hype-driven market was that people wanted to understand what these things were. So lots of people searched, but just because they searched doesn't mean they got involved. Just mean they searched. Maybe they searched for, what's a Bitcoin? Then they found out what it was, and guess what? They didn't need to search for that anymore because they know what it is. Now when they saw it on the news, they didn't necessarily have to search for it. Doesn't mean they bought any. Could possibly mean they bought some now, but they didn't buy it for the first time they searched for it. So I think that looking at that type of data is very easy to manipulate, right? So you can use that little snippet of data and make it sound like it means almost anything. So I think that's relatively meaningless. I would say that we're still definitely in a retail-driven market. Is there more institutional money in today than there was last year? Absolutely. Is it significantly more in terms of percentage? I don't think so.
Okay, so a retail-driven market. Always a pleasure hearing two quite different opinions there. Now, just finally, because we are unfortunately pushed for time, we spoke yesterday about the alleged Binance KYC hack. So are there any updates on this case, and what are the implications actually for people who have had their private data shared online? Are there any steps that should be taken? So Jason, we will come back to you.
So actually, yeah, there have actually been updates. Apparently, the person that supposedly hacked Coinbase had a month-long conversation with CoinDesk reporters, and essentially he revealed how he hacked individuals sort of behind an earlier hack when 7,000 Bitcoin was stolen from Binance. So essentially, he was sort of the a white hat, at least according to hear him tell it, he was a white hat hacker that was essentially like sort of stealing from the people who had stolen coins from Binance in the first place. So he sort of claimed that his aims were altruistic and that he just wanted to bring the attackers to justice. But he was also sort of asking for some sort of reward and sort of money in exchange for that, and which isn't, I mean, depending on which way you look at it, isn't incredibly strange, because a lot of companies will offer a sort of bug bounties if you sort of reveal information that allows them to sort of patch up their system. And indeed, it does appear to seem like there may have been some sort of a backdoor in Binance servers sort of placed in there by an insider. At least that's what that's what it looks like, just based off of what CoinDesk's initial investigation found. They spoke to essentially a security researcher that looked at the system and said it seemed that there might have been some sort of backdoor placed in there by Binance insiders, and that would certainly be something that Binance would want to plug, and perhaps would be fair for somebody to ask for a bug bounty for that. So I think there was this sort of situation where he was providing information to them, and he expected to be paid a bug bounty, and for whatever reason, either their relationship deteriorated, and ultimately, I guess he just decided that he was just going to publish the information, and he published some of the information, at least the KYC information. Supposedly, he hasn't published, data that would allow people to steal actual cryptocurrency, but supposedly he published this sort of data. So the update really is that the hacker was actually hacking previous hackers, and sort of the plot gets thicker and thicker. But the one thing that this does tell you, of course, is that there is some sort of hack. I mean, this isn't it isn't just FUD. This is there's some fire behind this smoke. So like I said yesterday, more information I'm sure will tumble out over the next few weeks.
Absolutely. I guess it just seems like one of those stories where the plot really just does thicken. And like you said, I think we'll have to keep our eyes on this and see what happens next. We know more than we did yesterday, of course, so we'll be on this story. Kevin, just finally, your thoughts for us on this.
Just a quick analogy, because everybody knows I love Binance. So this is kind of like from this white hat hacker. This is if somebody was robbing a bank and they stole not only all the money in the vault, but they stole everybody's wallets that was in the bank. And then this guy came up behind the robbers and stole all the identifications out of the wallets that they stole from the bank, and that makes him a white hat hacker. No way. So at the end of the day, there's definitely smoke behind the fire, like Jason said. There definitely was an intrusion where data was lost, and Binance has to come back and kind of explain what happened there and explain what they're doing so that it doesn't happen in the future. And it just goes to show that no matter how big you are, no matter how much money you probably spend or throw at a solution, there's always going to be somebody that's craftier than you are, which means you always have to constantly improve your infrastructure. The best infrastructure today can be the worst infrastructure tomorrow. So it just means constant spending of money when you own a business that protects other people's financial data.
Absolutely. I think innovation, like you said, as technology develops, we need to be on top of that, especially when you're protecting other people's data, as you say. But very interesting that no smoke without fire. Guys, as always, it's been an absolute pleasure having both of you on the line with us today. Thank you so much.
Sure. Thanks, Leo.
Now, before we sign off, I do have a last-minute update from my editorial staff regarding the crypto market. The cryptocurrency markets have been trading sideways. The total market capitalization stands at less than $310 billion. There are no significant changes to the trading activity as well, and the coin market cap website's daily traded volume still measures at more than $60 billion. Bitcoin trades just slightly in the green, while the rest of the top 5 digital assets have moved into the red. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin Merko and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.